Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan. He's a co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we've got Dick's Sporting Goods tomorrow reporting. Stock's off about 11% from those all-time highs that we saw at the beginning of the year, but it's relatively flat in 2025. What kind of data do you guys have on this one?
Well, we have relatively flat data. I think Dick's they're doing a good job. I would say steady but not spectacular as we head into the fall season. App engagement, when we look at app engagement for Dick's Sporting Goods, it's really a pretty nice story. I think they had a really nice back to school season, which is very critical for them. It kind of sets off the, kind of holiday season. And so we like what we see there. But and it tells us that the digital channels are working pretty well. But when we look at, web traffic, which is indicative of foot traffic versus the stock price, it's basically been a one-to-one correlation for a very long time. I mean, it's just step by step. The LikeFolio data is just tracking the Dick's Sporting Goods stock price. Is kind of wild, and there's really no divergence there that we see to take advantage of here. And so as we head into this earnings call, I think it's going to be a lot about the Foot Locker acquisition. I think it's going to be some about tariffs. I think those forward-looking statements about those two strategic decisions that the company has to make will dominate the call, because I think that they're going to have a pretty good story to tell. They're not going to shock in either direction from a report standpoint. So I think it's going to be all about how they set up the rest of the year in 2026.
Andy, this is a fascinating company because they've proven that omni-channel still works. Walking through their store, and I do it often, right? I've got children, and there's one relatively close to my house. It's like a marketing masterclass, right? You walk in, and it's Nike, all right in the center of the store, in the front of the store. And as you work your way back, for me personally, in the store I go to, it used to be Under Armour. Now Under Armour is way in the corner in a smaller section. And as you work your way through, you see the popularity going up in some brands and down in others. And, I think this, the media network is an interesting thing. Their new ambassadors, Kevin Durant, Tom Brady, Travis Hunter for football is on a commercial now. Sandy Lee is for the young women. I think they're covering all the demographics. They're doing it really well. The question is the American consumer, showing up like they normally do? But boy, these stores look efficient. Now, they're not where you want to go to get measured for golf clubs or anything certain, but they are a sports superstore, Andy.
Yeah, they are. And like you said, it's a fun place to walk through, generally enjoyable experience. I'm really hopeful that they can take that same level of professionalism and experience to the Foot Locker footprints that they'll have. I think it could be a really underrated acquisition at this point. Foot Locker is struggling, but I think the way that Dick's handles their footprints and the way that they display the brands and get users onto the app and into that omni-channel experience, I think is going to be critical. And I think they see a path to using the Foot Locker stores to get people onto the app and into the larger stores where they can get a higher ticket. So I like the strategy. I think it's a really well-run company. From a macro perspective, your guess is as good as mine in terms of, what happens with tariffs, what happens with inflation, et cetera. I think this is mostly a macro play. So if you have strong opinions on that, just go with your gut, because basically Dick's at this point is performing as expected, and we expect the acquisition of Foot Locker to go really well.
Yeah, that's supposed to close next month. And Foot Locker just came out with a report. They missed on EPS, but revenue was basically in line. Andy, when you look at this, the competitive landscape for sporting goods stores, I mean, Kevin and I have seen it. I mean, there used to be big sport marts and other big brand names for years in Chicago. Now there's none. There's only Dick's Sporting Goods. And now you're taking another competitor with Foot Locker. You know, if the economy stays pretty firm, I mean, this is one of the only places that, besides maybe ordering it online, that you can actually go and see the sporting goods equipment or the apparel to buy stuff. And that's got to be a leg up for them, right?
Yeah, it has to be. And again, it goes back to the store experience. I think Kevin nailed it. You know, if your kid wants a baseball bat, you're not just going to go on Amazon and have them look at pictures and decide which one they want. You're going to walk into the store. You're going to end up buying a glove, some shoes, you know, some water bottles, etc. And so this is the type of store that's extremely resilient. This sector is built for omni-channel, and Dick's has mastered both the digital and the store side of things, the storefront side of things. I think this is one of the best run companies in the world, and it's really just a bet on, you know, how active and how active the American public is and how much money they have in their wallet. Because if they're getting more active and they have more money in their wallet, then Dick's is going to do very well. If they're getting less active and have less money in their wallet, then Dick's is going to struggle. But either way, Dick's is the one to beat in this space by a mile, just like you said. And now they're taking out Foot Locker. They're pretty much the only game in town. All
right, great stuff, great data. As always, Andy, appreciate it.
Thank you.
All right, that's Andy Swan. He's the co-founder of LikeFolio, breaking down that one chart.